None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials.
Good morning, everybody. We got the patriotic flag in the background, 4th of July. Still trying to figure out, I've always talked about how this week went so fast. Well, how is this year going this fast? I mean, it's July. It's pretty crazy. Meanwhile, lots going on in our great country. Employment is improving. They're continuing. Yeah, so good morning, Mitch.
Good morning.
So, I guess we can talk about some of the stats. We won't keep our flag up for too long. We'll go to the other market screen here. But the bottom line is we're continuing to see some improvement in our markets. Yes, we are at a new yet historic high again. Dow Jones over 17,000. Something I haven't talked about, which I'm going to do today in the market section, is some of the Dow Jones projections that are out there. I don't really talk about that, but since it's in the news and it's above 17,000, I would say you ain't seen nothing yet. So we'll have to go from there on that. So anyway, yeah, it appears I got some sun on. It looks like I have a bunch of sun, but I think it's the lighting this morning, so I'm not as red as I look. So anyway. In reality, so let's go over to market screens. We'll just talk a little bit more about what's going on with the markets from standpoint of employment. It was up 288,000 jobs, 6.1%. Mitch and I were talking offline before we came on air, and we were talking about this is the best we've been since September of 2008, and I thought about that. Wait a minute, that was a terrible period of time. So we're as good as, almost as bad as we once were. We're that good now. So we were looking at unemployment prior to that in 07 was 4.4. Participation rate. Yeah, go ahead, Mitch.
Yeah, March 2007 we were right around 4.4. The best that we were at, I think, was at the lowest was right around 3.9 or 3.8 way back in 2000. But
here's the funny thing: is the participation rate has changed a lot too. Most of these numbers are because nobody's working, or we're down to 62%, which is a 36-year low, I believe.
Yeah, Zero Hedge had some interesting breakdowns talking about the employment, that really what they're focusing on is just the number of jobs as opposed to the quality of the jobs. And really what it is a lot of people getting this part-time employment. It's just quality of the jobs isn't what it once was.
Yeah, and I think last month we talked about this, but people point out quality. Bottom line, jobs are jobs, and it does put cash flow into the economy, and all those things happen, whether it's incremental or not. It's be nice that everybody had MBA type jobs and all that, but it actually doesn't work that way. And if you look at the way the populace of the United States is moving, it's not surprising. I think most of the college kids, especially the MBA grads, are the most unemployed people out there.
Right. So
maybe it doesn't pay off, and they're taking jobs. I met a guy at Best Buy that got an MBA, and I'm like, really? So he's even lying, or he's drastically underemployed. But the reality is the fact that you have a good education doesn't mean you're be able to present yourself well and survive in a marketplace. There's a lot of expectations around education that somehow that equals you should get a good job because you did something else. It has a lot to do with other ways of presenting yourself, I'm afraid. These young folks will figure this out, I guess, eventually. Anyway, yeah, so while 6 6.1 sounds good. Participation rate at 62 is really not as good as it sounds, but who cares? Market's at 1983 right now, so why would anyone actually care? At least any of us in the upper end of the economy that owns stocks, which is 10% of all the people only own stocks. So anyway, there's a lot to be said for the improvement, certainly, but there's also a lot to be said. It's not. Was it the old gray? Was it the old gray Mary? What she used to be? That's kind of what's happening here, And then you see all this stuff going on the border and everything else, and they're blowing the hospitals up and all kinds of stuff right now from the standpoint of overwhelming every resource we have with this thing that's going on. So it's gotten me pretty unnerved, and especially being in a border state, we kind of feel the anxiety maybe higher than a lot of other folks do. I'm not sure. It does for me anyway, and people I'm running into locally, that's the way it works. So let's go ahead. Mitch, you had anything else that you saw that worth mentioning?
No, I mean, I think you hit all the main points right off the bat. So.
Okay. Well, sorry to take your thunder there. No
That's
pun.
all right. It's
no
good.
Pun intended. Okay, so let's go ahead and start looking at some of these markets and take a look at what's going on. I've got the daily S&P here, and as I mentioned, I will go through the Dow Jones and show you where the objectives are going, what the Fibonacci objectives and things are. And there has been something happening, and when I was writing commentary yesterday, I saw it, and then the synapse missed me, and I didn't mention it. It's not that big a deal, but I'll bring it up this morning. And this happens all the time, and as we, I enjoy doing these shows because it kind of gives me a context as I'm walking forward the analysis from day to day. In this case, we only did 2 market thunders, but 3 times a week to incrementally walk forward what's going on in the marketplace and give a very solid perspective of what's going on. It gives, at least it gives me a great perspective. And one of the things they always say, if you're teaching and presenting, you're learning yourself. So this show has probably helped me to raise my game a bit as well, because we all tend to get into kind of patterns, some good, some bad. But one of the things that happens here, I'm going to bring up the sheet here so we can see this. Just to go back a couple days ago, 3 days ago to be exact, I was talking about the objectives on the S&P on the short term was 2018 to 2054 with extreme at 2776 on the daily charts. But yesterday, after some of the action, as I've talked about, the volatility has continued to contract. There's an update. It's hard to see the cyan number, but it's 1987.08. We'll call it 1987.10 is the revised Fibonacci objective. There's 3: 87.10, 2003, and 2013. Both of those are at the 30 mark. So 2003.30 and 2013.30. And so today, I'm moving this around a little bit. We've been 84.21 on the cash, and that is we're moving closer to that minimum target. Typically, the target on the shorter term will go in between target 1 and 2, which would be 1887 to 03. The extreme would be 13 on this. So it's moderated a bit, but it's still pushing toward that 2013 number. So guess what we get to deal with again already? We just dealt with this a few months back now when we went through. The question is, every time we go through these even numbers, we've been getting the same type of reaction. So we get up to the even number, we get up to 2000, and we get this volatility. It falls back, and we've typically been falling between 50 and 75 points back on the index. So it's very possible if we continue to move higher here sometime in the next week or two, depending on how this momentum changes, we're going to see that type of activity where the market's going to be moving up to that 2000 number. And if we got, interesting enough, we got a 2003 target. So like I said, we went to 1900, we dropped all the way back to, I believe it was 1817. I could look at it on the screen here, but we dropped back substantial amount from the 1900 when we first hit it. We went a few points over it, and then we got the typical action, and it seems to be happening at every number. I don't really watch the Dow Jones very closely, so I don't know what kind of activity we've had around the even numbers, but the S&P has definitely had some characteristics, and this happened at 16, 17, 18, 19, now 2000. I don't know. Should I say that again? Because that doesn't even sound like you could talk about that, and that's all, that's all been within, the last year and a half that we've done this. So the market, this huge move up is continuing. The interesting thing is there's not been any excesses in this market as it goes up. As I mentioned several times, it's been regenerating itself as the markets consolidate. We did a 13-week consolidation, traded in a range. We finally broke out of it. The old 1830 number that we traded around for a while. Once we got above that, then we ran to 1900, and then we got through 1900 finally after some gyration, and now we are at 2000, and like I said, the numbers sound bigger than the reality of what they're doing. So we're only looking at 1% move now is 200, almost 200 S&P points. So you're going to see some pretty crazy numbers coming out from that aren't going to make sense. You're going to be thinking, boy, I can't believe it's here or there, but in reality, it's not going to be a lot in percentages. So that as we get bigger, it's going to feel like more is happening than it's actually happening from a real return basis. But anyway, so this is a moderation of this pattern, but it's the same thing that's happened several times. I'm going to take this off the screen, bring the whiteboard up, just so I can point this out and make sure I'm out of the way here. But this has been the pattern all along. We'll get here was back in May. We had these objectives here, which were much higher. They got moderated over here, and then the market stepped up. Same thing here. We had a higher objective over here on far right. Now we've got a moderation going on in the numbers, and this has been kind of a pattern with from a Fibonacci viewpoint. Is all these little patterns that are unfolding. I think I showed you before, but let me see if I can bring this up real quick. I'm hoping that it's already there, and it is not. But let me put it up here because I want you to see this. This is I think to give you a better view of exactly what's going on here. So we're going to put on the pattern finder. On here, and you're going to see that now on the screen you can see a white line and a red line. The red line is the bigger pattern, the white line are the small patterns. So you can see as these patterns are unfolding, this is what the VPM logic is recognizing and projecting these numbers from. So as they contract and these patterns get smaller, then you're going to get not the big huge patterns that are unfolding from the standpoint of the Fibonacci numbers and the projections. So not to go into an Elliott wave thing presentation here, but the whole basis of the wave theory, that at least some of the things, it's sort of some of the things I pick and chose from to use, is the patterns are all related, and that's important to know from the standpoint of that's why when they contract, they change the Fibonacci projection a little bit. So as we see this pattern start to get tighter and tighter, then the objectives of where it's going to go, so it's a tighter stair step. And it really doesn't mean much normally about whether the trend is ending or not. But let's go ahead and move on to the intermediate and looking at the weekly graph. And I am going to format these techniques. I'm going to take the pattern finder 1 and 2 off I just wanted to show it on that level at that. So but the same thing is happening here. Now we've got these new objectives up here. I talked about this in I a couple of days ago in commentary, where that back on May 9th, it was projecting that we were going to go to this 1973. Well, now not only have we got to 1973, we're at 1984. So we've actually exceeded that, and we're heading for that target one, target two, which is going to take us up. I'll bring this on the screen so you can see it. That target two is 2034. So on a short-term basis, we're just looking at, we've got the objectives of the 2003, 2013 as an extreme. 2089, I think, is the number that we're close to. 87, actually. We're close to getting to that minimum number, but typically, like I said, they'll go into at least into target one, target two, or target two, target three, in the range there where these tops will happen. And you can see, if I went through all this, there were some this objectives going way back in 2013 that I'm looking at right now. We have a the projection back at that point in time was for the market to go to 1551 to 1679, and this was in December of 12. We actually hit that number. Let's see what we came to. The high was 1687, and the target was 1679. So, and that was hit all the way in about 6 months later. So these patterns will be generated, and then we'll see we'll see them come back up again, and they typically get hit, especially when you're in a trending mode like this. You're going to see this thing get hit. Going off to since this probably will have little relevance, but we're looking at the monthly now. And one of the things that I talked about, which this is sort of interesting, I think, at least from my viewpoint, hopefully you find it interesting, is that we have on this number, matter of fact, I can bring up the actual number, but we were at 180 on the PPM1 on this chart. And I tried to position myself. Let me get off the screen here for a second just so we can look at the numbers a little better. The numbers are 165, 162, and 109. And if you recall what I've talked about this before, is one of the things that starts to happen, it's not quite there, but it's really close to happening, is that the short term, or the PPM 1 and 2, will start to suggest that the trend is no longer expanding. And this was expanding substantially last month, okay? Now all of a sudden it's a dead heat. It's 165, 162. And that, depending on the price movement this month, will probably stay similar in the projection from that standpoint. But what will happen when we start to get to the end of this trend, and it won't be, when this happens, it won't be the top that day, but it will start to suggest that we should start looking for a trend top, will be when the PPM 1 is not moving, it starts to decline. And it did decline pretty substantially this month. As a matter of fact, by 20 ticks, I believe. Let's bring that up and just see what it is. I've talked about this several times. So the number is 165. It was 181 last month. So, and 181, PPM 2 is 149, and PPM 3 is 106. So now they're 165, 162. So PPM 2 is accelerating, which means it's starting to catch up to the 10. So you can see internally what's going on with these moving averages. And from a trend follower standpoint, and at least I haven't heard this type of dialogue, but very few people that are trend followers have the ability they just look at the moving average. Okay, moving average is up. I don't know. Probably one of the more, at least my patting myself on the back, and I didn't even come up with the idea. Dr. Prater did, one of my old workmates, as far as in our laboratory when we were working on some of the concepts here. But he was the one that came up with watching these rate of changes to determine what the trend was and what was going on. And over the years, as I've watched these things, I've become to understand when the trend's expanding, when it's contracting, and what oftentimes will happen is this phenomenon I'm talking about. So first signs that we're at least starting to get there, if you go back to comments that I've made in the last several days, we're looking at maybe sometime in around end of September, once again coming into an October high is a very strong possibility. That there's a seasonal tendency there, we all know about that, but the realities is that it is lining up that this is a pretty good potential. So we're 4th of July here, so we got July, August, September, and all of September. So you get a better part of 4 months to be really watching what's going on here, and that'll be my job for you guys. That's what I'll be doing with my time. But on the monthly, that's what we're seeing from that standpoint. So let's go ahead and I said I would bring up the Dow Jones. So let's go ahead and do this. Let's do. Here's the Dow Jones. These are numbers I haven't. These are previously on discussed numbers here. That's just good. So the objectives here, I'm bringing up on the Dow Jones for those of you that are watching it, but it's the minimum objective is 17,209. We are at 17,064. As I mentioned just a second ago in talking about the other values on the S&P, we're looking at going into target 1, target 2. Target 2 is 17,923, 18,364. So if we wanted to round that off, 1725, and we'll call it 1865. And so we're looking at a pretty good move here. What 1% is going to be 170 points. Is that right? Yeah. So we're looking at another 4 or 5% on all these indexes, and that goes back to where I talked about in the target ranges on the S&P at the 2034, 2076. That, if you go back a couple of weeks ago, we were talking about that being about a 4 to 7% gain, and that continues to point to where the highs are likely to come from. And what we're seeing, and from a rotation standpoint, we're still seeing a lot of stocks that have come back in the last, I don't know, 6 or 8 weeks now that have some pretty good potential. I think if we went over to the VPM stats, we're looking at about a 30 some odd % gain. Mitch, would you mind looking at that just on the stat page? What that average is? Yeah. And then, but I think it's, if you look at the optimized value, it's on a weekly, it'll come up. I think it's about 32, and I think we've only achieved about 20% of that. So from a pure VPM standpoint, there is quite a bit of time left in this pattern, as well as potential gains. So you have to realize that the indices are driven by a couple handfuls of stocks, maybe 50 or 60 stocks. The outliers, or everything in the background, have minimal impact. So there's a lot of opportunity in some of these stocks. Did you find that number?
Yeah, so when it comes to the optimized weekly, percent duration fulfilled, we're at 29%. Average profit is 37%. And we are about 18%, 17.8% percentage profit fulfilled.
Okay. All right.
So we're still a ways away.
Yeah, and that's the duration and the expectations from a statistical standpoint. So does that mean it's going to get hit? No, but it does tell you that the trends that we've identified and what these trends normally do are having that. That's the expectation here. So one of the things that I felt was really necessary when I started this company a long time ago and bringing you folks into a quantitative world was you had to have some expectations. And I've always taught traders, you need to, when you go into a trade, you should have an idea of what kind of risks that you're going to take. You should have some idea of what type of returns that you might make on a trade. And if you look at the VPM trade profile I fulfilled those needs by giving you an average risk that you take when you're putting on these trades, as well as the average gain. And then you can go through and look at the trade log and look for, and we've talked about this in Process Warriors and other times, that you can look for a, consecutive winners and losers to give you a probability for what's going on there, what's likely to go on, let's say, from a statistical standpoint. So, but yeah, so Dow Jones this is on a monthly basis. I'm going to take this down. Probably shouldn't have, because I just realized I'm going to probably need that screen back up. But on an intermediate standpoint, there is no new objectives at all. And then we'll go to the short term. We'll go into the daily just to see what's out there. Daily, we're getting close to some of these numbers. Like I said, I took that down. Probably should have left it up. So the targets here on a daily is 1713. Take that back. 1712 to 7, with the extreme of 17,176. And I'm going to move this out of the way so I can see what the value was. So we've been 1774. So we've got maybe another 100 points to meet this objective here. Oftentimes when you're in a trend, especially this, potentially the pattern on the S&P is potentially very, very bullish. And it seemed odd talking about very, very bullish when you're already at 17,000, right? Well, understanding the context and having the context of what's going on here is also important to understand. So like I said, I don't normally cover this particular indice, but this pattern that we've got going right here, I'm just going to draw it in with the whiteboard here real quick. This is a classic A, B, that's actually the wrong, hang on. This is a classic A, B, C correction, and now we're starting a move back up. What we'd have to see in this move up, we need to see these PPMs get to a, sorry about that. PPMs need to get to a trend mode. I accidentally clicked the wrong button. So we're at 0.09, 0.09, and 0.08 on the daily. So we're pretty flat from that standpoint. We need to see these numbers move into the 0.25 plus across the board. Then you've got a pretty robust trend accelerating up. And I suspect if we're going to get into this 4 to 5% move up, that we'll probably see some of those numbers at least briefly in this trend. And we haven't really seen that much of an expansion. But anyway, like I said, I normally don't cover this index, but it's in the news. Certainly if you turn on CNBC today, that's all they can talk about, because they're always funny. They're always focused on the Dow Jones. There was an article on CNBC today that was talking about, I don't know, 189-year history or some 89-year history or something. The only stock since 1929 that's still in the S&P is GE. They're the only stock that's been around. There is no other stock. So it's basically evolving, and they made the point all the stocks that are probably in this will start to disappear as economy and technology changes. So it's really not the industrial average anymore. It's what McGraw-Hill thinks is where the world is going. It's by committee and by I've always said that they're always trying to pick stocks that they think are going to be the leaders in a way, but leaders to make their index go up and go up and go up. So they're constantly changing the constituency from that standpoint. And it's really the Dow Jones is the one index is more like a gymnastics meet. It's judged by some folks. There's the criteria to get into Dow Jones is somewhat sketchy. In the S&P, it's at least a capitalization weighted situation, which will bring in at least from the top echelon of all the companies in the country. Anyway, so much for talking about indexes. So moved into half past the hour. I guess we can bring Mitch in. Been doing a little education and stuff here while we're going on. But yeah, so I guess this is usually where we start to go in and talk about some of the individual stocks. One thing I did not look at, folks, that now that I brought Mitch back, I'm going to take him out for a second, is I want to look at the treasuries. We have not.
I was going to say the treasuries we still need to get to. So
yeah. So, it's holiday weekend. We've got 1 foot out the door, right?
That's right. Half hour until the market's closed. So
So you're looking at everybody's got their foot out the door. Let's put it that way. 1 foot out the door and a hand on a barbecue stick to start flipping them burgers or whatever. Anyway, I forgot we had a short closing today, so this is almost a closing synopsis as we go through here.
Right.
So treasuries. Interesting enough, we have flipped this thing. So we were talking the other day, and matter of fact, it spiked up this morning. We're back at that 265 number. So, it's interesting because we've been talking about it. Did the treasuries have it right, or has the stock market got it right? And as I talked about, that if we start to see these yields rise, it is not going to affect the stock market negatively. And that's exactly it. Let's see what the spike high was on this thing here. Let's see here. The high was 269.2. So we got up to a pretty good number there from the standpoint of it got up to that number. Let's look at this is the daily, so let's go ahead and look at the weekly intermediate and get a feel for that. So we're right up into resistance. PPM, the PPMs, just going back a few weeks ago when we were there, let me bring up this view here just so you can see this. But when we were printing down to that 240, we had a negative 1, 2, and 3 PPM 1, 2, 3 minus 1.11, which is huge, 1.95, 0.33 and 0.95, and that all of a sudden we go to today and we're basically flat, 0.07, 0.05, 0.03, and we've managed to, if you look at what the values are, we've managed to get above somebody's moving average. So the 25, 2.57, 2.64 is the medium, so we traded up just above that, and 2.69, so we traded right into the 21 and 40 period moving averages on this, and that is pretty right into that resistance zone. But because the PPMs are flat now this thing is vulnerable to turn higher here. And like I said, it's turning higher for the right reason, and higher is not much. It's a quarter of a point. I still think everybody's going to be focused on the magical 303, which was a high that we made last year, and I don't see us getting much above that level. But as we've talked about before, if we go and look at the long-term objectives on this, we're looking at the potential for this thing going into the 340s to 380 range, and that's that. I want to take off the models just so we look at that. But here's that pattern. I want to bring up the whiteboard here on the longer term, and this is the chart, by the way, that is going to drive this market, not the short or intermediate. This long-term chart is what it's all about. And when you start to look at what's happening, you get tied up if you don't look at long-term charts, and that's why when we're going through the indices, we go through all these elements to make sure we have a perspective of what is there a long-term trend and what is really driving the market. One of the biggest, I think, errors that a lot of people make is they stay too short. They're looking at what's going on in daily charts and get caught up in a 1 or 2 day move or even a 10-day move and forget that the underlying trends are huge up. And that's a perspective that I've always kept. I call it more or less a kind of a top-down, where you're looking at long, intermediate, and short, trying to reconcile that they're what the story is telling. Sometimes short-term will be bullish, intermediate will be neutral, and then you have long-term will be will be bullish again. But you're just looking at these configurations, and oftentimes they line up. When the stars all line up is when you get the surges in the trends. So if we look at this pattern here, if I can find my cursor here, this is the pattern I've discussed before, and we came right down to the cross section. There was an old simple rule that developed way back in 1983. And that was that when you get to the point where the three moving averages that you see here, this 10, 21, and 40, put some arrows on it, when those come to a point of where they converge, there's a convergence, and then the market will rise above those three averages. They converge, and then they'll go down to the lowest part of the average. And when I bring this up, you'll see that that's exactly what we did when we traded back down to the 240 range. We were just retracing back up. So now what you would expect is some move, starting some kind of move up. You can read. I saw something. Bill Gross was talking about something. The rates are going to rise, and what a brilliant statement that is, right? Something about that guy. I think it's his voice. I'm not sure what. I'm not sure what gets me on that guy. But he's the bond king because he bought bonds and yields dropped for 20 years. So somehow that makes him the king. It's like Peter Lynch. I've said the same thing about Peter, and Peter is actually lives not too far from where I'm sitting right now. He's got a place. He's trying to sell it anyway. But the bottom line is, these guys got lucky being at the right place at the right time. So I'm not all that impressed. And gee, rates are at 0. I think they're going to go up. So anyway.
Good call.
Thank you. I really appreciate that. Sorry, folks. It's a holiday weekend. I don't know how many are watching, but maybe you'll stream this later if you get bored this weekend. But the bottom line is these rates are going to start going up. I think I'm not even sure that depending on how and when we get to test this 303 number, and that's going to first take a close over the 270 level. And once we get that, then we can talk about that. For now, rates have increased, employment's better, some of the fears are off the table. What we still have, they've got all kinds of stories they can play yet. They can play the inflation card, they can play all kinds of stuff to make rates go up, and then we can start playing the debt card. And there's with all the exploded debt and all the money expansion anyway, it goes on, and all those will become a factor one day, and then we'll wake up one day and the markets will be getting hammered, and everybody going, when did that happen? Meanwhile, it was like watching grass grow, and you haven't mowed the grass for a while. It's really, really long, and the fact that you haven't attended to it is probably the problem, and everybody's gotten complacent. But I still, like I said, when we go through the trends, I'm just not seeing the effect. So I have to believe that these rates moving higher are not going to have any very little effect anyway. So, all right, I did it. All right, now we're ready for bring Mitch on for a second here, and we'll start going through some of these stocks here and see what we can come up with. I'll probably take us both off screen. So, what's our agenda for today, Mitch?
Well, I wanted to start with just sort of recap. On Monday, we discussed that we would be seeing an update to the optimization in the system when it ran through the orders on Monday. So I just wanted to touch on to that real briefly. So on Monday, the last day of the last quarter, we had 51%, 51.533% mapped to the weekly 1.2 system, and we had 48.467% mapped to the 3.2 system. So as we'd said before, the first day of January and July each year, we go through the database and we update the optimization to map them to the right trade systems. And so I went ahead and took a look at it. You can take a look at it now.
And this is being optimized on a total return basis.
Right, on the net profit.
Yep.
So in this case, we did see a shift, and we saw it back away a little bit from the 1.2 system. So right now we're at 49.908% on the weekly 1.2 and 50.092 at the 3.2, which tells you, I mean, it's about as close as you can get to 50-50 on that.
Yeah, and that back off, this is interesting. So when we saw the last significant shift was back in the 08-09 period, when we saw volatility kick up through the roof, so to speak, and 1-2 responds a little better to this higher volatility and the way that when the markets start to get more active there and get higher volatility. So what have we seen in the last 2 years? More stable, elongated trends. We got all of a sudden 3-2 is the big trend monster, actually. And I think I mentioned even on Process Warriors, and I'll say it again, but we did a white paper many years ago back in the previous look back period, the previous 20-year look back in 1998 when I first started this company. And the look back then said, just put everything on a 3-2 and don't worry about it. And it was a 60-40 mix. But even then, the 3-2 models tended to do better. So we found that there was little benefit of even optimizing at the time. But as time has unfolded, there's been a great benefit in the optimization routine that we put together. Actually, that was put together in 2000, so a couple years after that white paper, because I started to see some shifts in the database and things that were happening. And if you recall, there was a little bit of volatility in 2000. And we saw some shifts then go away and start to move more to this 50-50 model here. So, and as we've talked about, I know in Process Warriors and other things, that there can be a substantial difference between 1-2 and 3-2. And I think Mitch has got a pretty good example we're going to go through today of what's going to go on probably 6 months from now. And so we can go through some of those things.
Yeah, one of those stocks I just wanted to highlight, sort of to answer the WIFM, what's in this for me, is the stock Rite Aid. So ticker on that is RAD.
It's one of my favorite stocks.
Yeah. And this just got updated to the 3.2 weekly system. So I just wanted to take a look at that.
Yeah, let me get, so this stock has been a monster, and if you had, it came on under $1. I had this on one of my screens. It's definitely a favorite for me. And, but let's go ahead and we want 3-2 on here, right?
Correct.
So 3-2 has exited this thing, a nice trade. And let's see here, maybe I'll get Mitch and I out of the way.
Made a gain of 332%, so that's pretty good.
Yeah, and 1-2 is, I believe, still long it, right?
Correct, and this is a great example where we saw a shift. Prior to Tuesday, it had been optimized on the 1.2, but because we locked in the gains and turned it from paper gains to real gains on June 16th with the 3.2, the net profit shifted in the profile of the stock. So now it's been optimized to the 3.2 system.
Yeah, so I'm going to put 1-2 up there just so we can take a look at that real quick.
Yep.
And 1-2 even came on earlier.
Came on earlier, and it's still long and long very nicely. I'm just pulling up the numbers right now.
Yeah, and the bizarre thing about that, usually 3-2 is the one to hang on through everything. And 1-2 is the one to be in and out maybe twice during this trend, and it never got out.
Yeah, and at this point, we're currently long this position on the 1.2 with a gain of 506%. So that's a nice gain on it.
Yeah.
So it's not necessarily that you have to take any immediate action. We don't want you to just shift from 1.2 to 3.2. But this is just an example of how one trade can cause a shift to be made from one trade system to the other. And in this case, because it's such a substantial trade that we're still long this is one that you don't want to just arbitrarily jump to the 3.2 and sell out of it because it had already locked the gains on it.
Yeah.
You just want to continue holding the course if this is in your portfolio at the 1.2 and just wait for that sell signal to come around and then reap the gains when that takes place.
Yeah, I was trying to get back. I guess I've got all the data on this stock. I went to a monthly. I'll take us out of the way here real quick. But the monthly, this stock started at a much different price, and I'm not sure what the story has been. They just took this stock from the start. Oh wait, there we go. There is more here. Go back to 95. If you look at on the screen now, you see we had this big run up in this stock all the way to what are we looking at here? High $51 a share. This funny thing happened in 2000. Not sure what that was. I think it was how they got caught in a general decline. But the stock goes all the way from 51 down to $1.50, and then we more or less have had a sideways move. What's the little peak here? We're looking at $6, and it just kind of crawls along. I'm going to crush this stock down so you can get a real perspective of what this stock hasn't done. And meanwhile, all it's done is there's been a couple trades here, very long held trades. This is on 3-2, and I'm on a monthly graphic. But the trend finally has come in. It was a classic where we had a buy and sell and then back in again. And like I said, this is a monthly, very long-term graph. But we're looking at 170 on the buy here. But really what I want to look at here is not so much what the models did, but to see what the drastic change is in these things. And I think these guys are more regional. They're not like the CVS and Walgreens, right?
Right.
Are they out your way? You have Rite Aids?
They have Rite Aids in Michigan. Out here in Minnesota, I don't think I've seen.
Yeah, so there might be more. I'm not sure what their demographics are, but I think they're more of a regional deal than there is like with the CVS's and the Walgreens, and that whole space has done really well. By the way, it has. So that's been a place to be. I can't imagine it has anything to do with healthcare. I don't know. The fact that they're doing all types of vaccines and stuff you used to have to go to the doctor for. Maybe there's something to it there as far as the Walgreens. I suspect everybody's competing in the same space, does the same things to a point. I don't know. Like I said, I haven't ever been in a Rite Aid store, so that's why I realized they must be regional, and they're not in my region. So
sure.
So anyway, but yeah, so that is the story of the optimization table. And it doesn't mean you have to, oh my gosh, I got to switch over to 3-2. It doesn't matter if you're 1-2 or whatever. It's really most of these. Matter of fact, when 1-2 trade comes off, depending on how this comes off, this could flop it back the other way. And this is a good example where 1-2 and 3-2 are competing for that number. They're so close. They're one trade difference. There's other symbols that you're going to see that there are multiple trades to change that profile that would have to happen, and typically that doesn't happen. So there are stocks out there that have never been flipped on the 1-2, 3-2, and there's stocks that have changed slightly. But when you see these slight changes, where this time it's 3-2 and next time it's 1-2, it's going to be those things are usually pretty close to I guess to returns. They could be a little better, but from the standpoint, this is really what it's about, is whether you found the 350% gain or the 550% gain, they both track that particular trend. And yeah, who doesn't want an extra 200%, right?
Right.
But you can't figure that out ahead of time. That's the problem. That is hindsight. And so, yeah, you have to. I'm not going to be crying about my 376 gain. That's just not going to happen. But it was just called a good trade. That's what they call those. So.
Right. Next up on the list is Green Mountain Coffee Roasters, GMCR. And that is also on the 3.2 system.
Is that what I got up here? Let me just double check.
I
believe
so.
It is, yeah. I have 1-2. I switched over. So this is 3-2 because we were demoing that. 3-2. There we are. So we got in this trend. It spiked up. It went down. We got out. We got back in. Looks like, let's blow this up. It looks like maybe just 1 week difference here from that standpoint. Yeah, 2 weeks. So we got out, market, it reversed on right after we got out, and then this is weekly, yep. And then when it broke out, we got back in on this reversal breakout. Matter of fact, what triggered this trade was the bar. Obviously, we purchased on this bar, so the previous reversal bar was the trade that got triggered. That's the action that triggered the re-enter on this trade. And like I've said, I don't know how many times, say it again, I guess, as these quick triggers in and out are the best trades you're probably going to find. Very few of them actually fail on the second buy. I've not seen a lot of failures, and the anxiety over, oh, we just got out and we're getting back in. Reverse that psychology and go, this is a good thing, because these are usually trades that were going to fail. Matter of fact, I was looking at one the other day, and maybe I'll bring up a stock just to illustrate this, is MU, is Micron. I guess it helps if you, there we go. Micron did exactly this, and this thing is a screamer, another one of my favorite stocks out there. And if you look at this trend, I'll get Mitch and I out of the way for a second here. If you look at this trend, this thing got, let me blow this one section up here so we can just look at the latest activity. Look at this last couple trades. So you can see we got in March of 2013. We got out here. We got out right here. 2 weeks, actually, yeah, 3 weeks later we got back in, and I know this last I looked to see what it's up a little bit today. It was up like a 36% gain on the current trade. Mitch, would you bring up MU and just? But this is a classic, folks. This is where when these trends reverse back up, when this is where you want to be. These are really good trades, and once again, the dots aren't connected. It's just a new trade. Right. And it had nothing to do with the last exit. Oh, we bought high. Zero, nothing. Coming from a trading floor environment, the bottom line is you're going to do trade after trade, and if you had to connect all the dots, you would be depressed beyond depressed, and you would never trade again. The reality is they're just transactions. Some work, some don't. And in the end, you have statistics for all of the transactions. If you're a smart trader, you keep a good idea of how well your decisions are. And that's what ER ratio is. That's what all the stats that we have built in BPM. These are things that I've learned over, hard to say, 34 years. Actually working on 35. That's really nuts. Matter of fact, somebody pointed out we're having our 45th high school class reunion. So not a young man anymore, and that's all there is to it. But the bottom line is these are things that I've learned, I built into the software, and I'm so glad we have this show, and I hope as many people, we can keep getting more people watching this, because there's a lot of perspective that comes out of this from my view, the developer's viewpoint, and the concepts that have been proven over these 35 years to really be fruitful from the bottom line of capturing profits, and that's what we're trying to do. We're not trying to I don't know what a lot of folks that meet us think we're trying to do, but that's what we're trying to do. So what else you got, Mitch?
All right, let's also take a look at give me 1 second here. DuPont. Let's do DD.
Okay.
And it's currently optimized on the 1.2 system.
All right. You always like doing that to me, don't you?
I like to get a little bit of variety, but I've been trying to keep them together.
Yeah, okay. So, but it was interesting because of having 3-2 up there for a second, as we had the, it was a all one trade and just got out. this one had 2 trades, which is pretty typical in 1-2. That's why the situation with Rite Aid was way different than what you normally see. But it's because of the patterns and the trigger points that happen and don't happen that cause those dynamics. So you can't always nail down one of these models to this is it should have got out and got back in. It understands this logic that's been built into it, understanding those trends and the characteristics that it recognizes as what's going to keep it a +1 in our database, which is a long signal. But here we got this trade we got in pretty well off the bottom here into that convergence phase, and then we got out here. Let's bring up this. Yeah, we got out at 60. We got in on this stock at 47. 1, 2, 3 weeks later, we bought it at 64, and then we sold it at 65. So we made $1. So we bought 1,000 shares. We made $1,000, and we spent $7.95 for a ticket. So not a bad trade. I'll take that.
Yeah.
And whether it goes up or down from here, we'll find out. But that's pretty much it. So we're down to 4 minutes. So do we have enough time for one more maybe, and then we'll summarize and call it a week and go off into the sunset?
Sure, we'll do a last one. Family Dollar FDO. It's also on the 1.2 system.
That's F what?
FDO.
I went by. Oh, I got to tell you something. This is really quick. Yesterday I had to go up north in Arizona here, and on the way there, if I saw an article about Tesla, and they said this is the most important company, automaking company there has been. I drove by I-17 and Cordes Junction, which is 69, heading to Prescott, Arizona. And I drove by, and there were Tesla charging stations there. I said, I'm standing and go, wow, they really are changing the landscape. They're making an impact. They've been pretty successful here in Arizona, and I see a lot of Teslas around. And my test drive, I'm still waiting for the call for my test drive on one. They're pretty fast anyway. They go like 0 to 60 in 4 seconds, so they're fast. But it's changing the landscape. So there are things going on out there that truly are making some shifts in the marketplace. So, but that was fascinating to me to see. I didn't expect it. The Tesla guy said they have strategically placed. You can drive completely around across the country. You got to go their route because they can charge these cars in 20 minutes supposedly, full charge. Wow. So anyway, I thought that was interesting.
That is cool.
Maybe some of you out there maybe own a Tesla. So anyway, so here we are with FDO. Oh, the reason why I brought that up when you said Family Dollar, there was a new Family Dollar store at that stop, which also had no cars at it. So I was wondering, and Cordes Junction is a typical Family Dollar environment where there's it's a very small kind of community. They tend to hang around in its communities, and maybe it was just bad timing when I was there, but there was not a car in the lot. I assume that the employee must have parked around back at least, so I'm not sure. But anyway, so but here we see a pop in this stock and a buy, and this is probably from a pattern standpoint, just quickly because we're down to the last minute after me telling my little story here. But on this pattern here, we're looking at. And this hasn't been that good a stock. I mean, I've got the right model. Look at this, in and out, 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 and in and out. So we finally got a nice trade here, decent trade there, and then we're out. Now we got a new trade, and theoretically, the way these trades, this would be a cup and handle trade. We'll probably move up toward the highs, whether we get into retracement values and it fails or what, I don't know. The stock doesn't have a great trending profile from a VPM standpoint. So when you see stocks like this, unless you have some real good fundamental handle on it, they're not going to add a lot of value. If we had a trade impact chart on this and it was in a portfolio and all these trades are happening, the impact would be not much. It'd probably be net positive, but you're doing a lot of trades for not a lot of juice. So anyway, that being said, I guess markets are going to close the same time we're done talking here, right?
That's right.
So this is the final minute. We're up 1097, making new highs on this. Let me bring this up.
I think the market just closed at 85.59.
Yeah, I get 51 last tick now. It'll settle at 50. Some of the what we call a runoff as they settle in some of the final stocks that came in on MOC orders. But look, I wanted to show this, so we're going to go about just a few minutes over, or a minute or so over. These are these differential charts. Look how the S&P continues to outpace. Here's the EFA on the left-hand side, and well, Mitch and I are both in the way, and you can't see the other one, so let me get out of the way. As both of these charts are declining substantially, so we're not even getting close to anything. And a weekly close, 1985.17. Let's see what the high was here. The high on this stock, on the market, helps if I can get one place where I can find it, and then we'll be off the air here, folks, and off to enjoy the barbecue. High was 1985.59, so we basically closed 20-some cents, 30 cents off the high of the session. So this thing is just printing through the roof. Anyway, so what we'll do here is we'll call it quits, and as soon as I can find one screen, we'll be on screen and call it quits. We're going to bring up our patriotic move with the flag waving in the background and tell everybody have a great holiday, be safe, and I'm not going anywhere. I don't know about you, Mitch.
I'll be staying close to home.
Yeah, close by the barbecue pit. Of course, all we have to do out here this weekend is actually put the barbecue on the sidewalk, or put the steak on the sidewalk. It's going to be like 108. So anyway, folks, have a great holiday. We'll see you next Monday. Same show, same station. Talk to you soon. Have a great day.